Welcome to Investors Insights, episode number 196. Today we will be discussing, will we see a Santa Claus rally all the way into 2017? And also, don't forget to connect with us on Facebook, LinkedIn, and Twitter. We'd like to continue the discussion there. So let's get right to the topics that are important to today's investors.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Morning, gentlemen.
Morning, Greg.
So it's hard to believe here we are in the holiday season, and 2017 is fast approaching. So, and a lot going on, I might add. You agreed?
Yes.
So really enjoyed the conversations we had this morning. So Trey, why don't you talk a little bit just in terms of some of the things that we've seen here recently?
Yeah, so the market kind of took a stall last week as the Fed came out and raised interest rates. Everybody knew they were going to raise rates, and they did. It always surprises me when the Fed does what everyone expects them to do. The market still looks shocked. I'm not sure what happened there, but so then people are backfilling, explaining why it sold off. And so the prevailing theory is that the Fed is projecting 3 more rate hikes next year,
right?
And then that's what the risk is. Coming into this year, the Fed was projecting 4. They did 0,
right?
Or they did one now.
One now. Yeah. But it made January very volatile.
It did,
extremely volatile
last year. And so the perception is so now they're projecting 3, and how much will they actually do? The big driver will be is if inflation actually comes to fruition. We haven't had inflation in years. The Fed's watching that. We've started to see wage inflation. That's good. We've seen CPI or spending inflation that's kind of bad.
Right.
We've seen the price at the pump. I'm sure everyone's noticed the price of the pump's gone up a little. So year over year comparables going into next year, gas has been very cheap this year. So comparing 2016 to 2015, it looked gas was a headwind to inflation.
Right.
2016 to 2017, it may be a tailwind. We might see prices a little higher. It may be a little inflationary. You could see the Fed maybe get a little fearful of inflation. I'm not sure if 16.
But let me say this: we spent a lot of time in this vlog over the past 2 years talking about deflation.
Mm-hmm.
It's nice to now have the conversation about inflation.
Yeah, a little bit of growth wouldn't hurt.
Yeah, exactly. Yeah, I can handle that pain. So, and I think everybody watching the vlog can too. Right. So, yeah, very much so. So, and then Bobby, talk about some of the data you threw out in this morning's meeting.
Yeah, so now that the noise around the election and the Fed is mostly behind us, we can concentrate on what's going to drive the market or continue to drive the market up, and that's economic numbers. The economic numbers have really become a focus now that all that noise is behind us.
Right.
And this week is loaded with that information we're looking at. So Wednesday, we've got a lot of housing numbers come out. Mm-hmm. Housing has been a big driver the past 2-3 years, very positive. Right. And then Thursday, a busy day. We got a third revision of GDP for the third quarter. And then durable goods and personal income both have been looking strong the past couple of quarters. And then also Friday, another housing report comes out. So a lot of information.
Yeah. The 2 housing numbers are going to be very key because we've seen rates rise in the last month. And so month over month, see if housing still is hot. And then same with durable goods, things that cause debt. That'll be very good to watch.
Right. Of course, we bring that up during the holidays. Sorry about that, folks. Ho, ho, ho. So, and saying that, because actually, as we got into this debate earlier this morning, you drilled down on more details in terms of what Bobby brought up there. So
on the GDP numbers, Greg's right. We're going to get a revision Thursday. Most economists think that's going to be revised upward for third quarter. We have to look back a quarter to get a little bit better. But it looks like it's going to go up, and we like that in absolute terms. But what we really like as a group is where it's coming from.
Right.
It's driven in combination by better consumer spending, better construction spending that is both A, residential, and B, commercial. That's a combination we have not seen in a long time, and we'll make the point to you, all that was going on pre-election.
Right.
So it was improving broadly anyway.
Right. So, I mean, on that note, you can tell that a lot of positive things going on. Even though that we're going into the end of the year, it's a very busy time from an economic standpoint, and also from the standpoint of all the political rhetoric that's going on and decisions that can be made as we go on into the 2017 year. So we're going to keep you updated. We hope you have a great holiday season, a Merry Christmas, and a special time with family and friends. And we greatly appreciate you watching this vlog and how you've shared it with others. We will be in touch. Thanks again.